In the metals quadrant, since the high print of over $2,200 on March 8th, the April gold contract is now down 4 of the last 7 sessions. Down today as well by about 0.2% on the close. But that also means gold has been up 3 of 7 sessions, which could mean an overall rally, but that's not the case here. Over those 7 sessions, gold has closed mildly lower, only by about 2.06%. That's a mild pullback when you consider that gold had rallied for 9 of 11 sessions for a total move of over 8.5%, accumulated in that high I just mentioned of $2,203. The high today, 2166.30. That was up just short of 0.1%. The low today, 2150.20, that was down almost 2/3%, 65 basis points to be exact. Now, markets seem to think that the Fed, the US Fed, in tomorrow's FOMC meeting will strike a more hawkish tone due to firmer inflation metrics, better US data, and higher energy prices, which we saw again today in the crude oil patch. So a lot of analysis is pointing to that, and that's pushing gold a little bit lower. But as we've seen before, gold's actually holding in pretty well with, again, this 4 of the last 7 sessions pullback only being a little bit over 2% to the downside. Well, if the Fed is actually going to be more hawkish, it should drop more than that in theory. So you could look at it as a situation where gold is kind of holding in. Also, with mostly flat seasonal trends approaching, yields on the dollar dominate, and obviously gold has an inverse relationship to both. Talking about a little bit of a tailwind from seasonality rather, in the middle of March to the end of March, but then it's mostly flat for about 6 weeks in terms of whether we get a seasonal headwind or tailwind. You look at yields today, mildly lower, but the dollar was stronger. So you're going to want to keep an eye on that typically inverse relationship if yields stabilize overall, and because we're not going to have seasonal headwinds or tailwinds for the foreseeable future.